And welcome back. California's home sold prices are nearly at a 2-year low right now, based on my own analysis of data from the California Association of Realtors, based on a new report that was just announced today, which is the 16th of February. On top of that, there's approximately 65% more houses listed for sale in California versus 1 year ago. So in today's California housing market update, I'm going to give you guys the latest update regarding home prices, home sales, housing inventory, and of course, much more, so you guys can make a more informed decision about where you should be buying or selling a house. And with that said, let's go ahead and dive right in. This is based on a new report from the California Association of Realtors that was just published this morning at the time of this video, which again is the 16th. So this is regarding stats we're seeing right now as of January 2023. So look at this. Here's a snapshot of what's happening right now. So the seasonally adjusted annualized rate for home sales is at 241,520 for January. That's a decrease of 45.7% compared to January of 2022. So a huge decrease of closed home sales in California. Also look at home prices, and stay tuned here in just a little bit because I have a lot to share regarding trends we're seeing right now regarding home prices in California and how that compares to years past going back to 2012. Some pretty eye-opening stats that I uncovered here. So the median sold price here in California for January was just over $751,000, and that's a decrease of 1.9% compared to 12 months ago. So home prices are negative compared to last year. Meanwhile, the unsold inventory index or the month supply is at 3.6 months, more or less double compared to a year ago. Also, days in the market, a giant increase of 175%. Houses on average are selling in about 33 days right now. So before we talk about some trends regarding home prices, let's talk about home sales. So closed home sales, here's what they had to say. Sales inched up but remain near 2007 Great Recession levels. So the levels we have right now at approximately 240,000 units. And by the way, these are single family houses only, a decrease of more or less 46% compared to 1 year ago here. But a small increase by 0.4% compared to December here. This huge fallout in home sales that we saw in 2022 is extending through 2023. And kind of just eyeballing this chart right here, the current levels for home sales on an annualized basis, excluding the onset pandemic, potentially may be at the lowest levels going back to 2007 or 2008. In other words, a huge fallout regarding closed home sales in California. And they say here sales remain depressed as affordability nears an all-time record low here in California, due to, of course, because prices increased so much in the second half of 2022. And of course, right now we're seeing huge increases of interest rates. And regarding home sales compared to 12 months ago, we're seeing virtually every single price segment here recording huge decreases by at least 35%. So for the range of, let's call it over $2 million, a giant decrease of 46%. If I recall from last month for December stats, home sales of more than $2 million was also the biggest percentage as well amongst these price segments here. But huge decreases of over 40% for all houses in the range of 500,000 to 749, 750 to 1 million, and 1 million to 2 million, of course, and 2 million plus. Huge decreases of closed home sales in virtually every single price segment here. And here's another way to look at that. Closed home sales compared to 12 months ago, a huge increase, especially regarding luxury home sales back in the spring months of 2021 compared to 2020. A huge increase of luxury home sales, but ever since really the spring and summer months of 2022, huge decreases across all price segments. Meanwhile, pending home sales, which of course is a measure of contracts being signed between buyers and sellers, increased slightly in January, but we're still down by about 34.5% compared to January of 2022. One thing I do want to mention regarding this is that it says here that pending home sales improve as mortgage rates cooled off. So this is regarding contracts being signed between buyers and sellers in January. So something to keep in mind here regarding that, because in January, according to Freddie Mac, for the month as a whole, average 30-year fixed rate mortgages nationwide was at 6.27%. Going back to October for the entire month, it was 6.90%. So I think there's two things at play right here, because this increase of pending home sales that we saw in January is entirely normal just after December, because in December, our housing market is in more or less a deep freeze, right? Because of holidays, not a lot of people want to buy houses and move during the holidays. So it's normal to see an increase of pending home sales more or less every January compared to December, right? And on top of that, rates actually decrease compared to the highs we saw back in October. So when looking at home prices as well as mortgage rates in the second half of 2022, prices and rates decrease in the last half of 2022. So the slight increase of contracts being signed in January right here, at least on a year-over-year basis, could be due to a seasonality of our housing market, but also due to a cooling off of rates as well as prices as well. Also, one last thing I do want to mention regarding rates though, is that when we're talking about any metrics regarding closed home sales, again, a lagging indicator, in California, it takes approximately 30 days to get the keys for your house. You get your offer accepted. Approximately 30 days later, you get your keys to a house, you can move in. Approximately 30 days. So we're talking about any metric regarding closed home sales for January. That's really when the home buyer got their offer accepted in December. I would say the vast majority of home buyers who are closing on their house in January probably got their offer accepted in December, and also locked in their mortgage rate as well. And because rates decrease from the highs we saw back in October, they decrease through December, as you can see right there, one would assume this could cause an increase of closed home sales in January due to the dip in rates we saw back in December. We're not really seeing that though, right? One more thing I do want to mention though is that rates right now are at 6.8% as of today, which is the 16th of February here. So I would imagine that the stats we see for February and March could get a lot worse if rates still elevated, or rates remain elevated at above 6.5%, for example. Anyways, if you guys have any questions regarding that or any comments you want to mention regarding that, then please leave a comment below. Let's go back here. So pending home sales are still down by 34.5% from 12 months ago. As you can see here, pending home sales increased compared to 1 month ago in virtually all price segments, especially regarding home prices in the range of $1 million to $2 million, as well as $500,000 to $750,000. But as the Realtor Association said here, pending home sales rose sharply from last month due to a seasonal change. In other words, the seasonality of our housing market, an increase of contracts being signed in January compared to December. And you can see that right here, because here's a pending home sales in light blue. The dark blue is closed home sales, a lagging indicator. Pending home sales, an early indication of home buying demand. So across all price segments here, we saw an increase of pendings compared to December here. The biggest increase was actually in the range of $400,000 to $499,000, an increase of 37.1%. Obviously, a very small increase in the range of $0 or $1 to $299,000 due to the fact that the median sold price in California is over $700,000 and not below $300,000. In contrast, though, when looking at closed home sales in each of these price segments right here, they have decreased by at least 20%. Okay, let's change gears slightly here and talk about home prices, because this is where it gets really juicy here. California's median home sold price softens, growth declines for the third consecutive month. So the median sold price in California is at $751,330. That's a decrease of 3% compared to December, and an increase, or actually a decrease of 1.9% from January of 2022. What really catches my attention regarding this is that look at this increase in 2020, as well as 2021, and also the first half of 2022. After that, though, a huge decrease of home prices ever since really the spring and summer months last year. There's a lot more trends I uncovered when looking at home sold prices in California. So this right here, or these two columns right here, are the columns I pulled from the California Association of Realtors website here. But everything else I actually added here. Look at this. All right, so January 2023, again, the median sold price, $751,000, a decrease of 3% compared to December, and of course, a decrease by 1.9% compared to 1 year ago. So remember when I started the video out by saying that home sold prices are nearly at a 2-year low based on my own analysis of their data here. So 751, the lowest levels since February of 2021, when the median sold price was 699,000. In other words, what this means is that the gains we saw back in 2021, as well as the first half of 2022, have been virtually wiped out due to this giant decrease of home prices in the second half of 2022, and of course, January this year as well. And here's exactly what I mean by that. Look at this. In February, we saw a 20.6% increase compared to February of 2020. And we saw a double-digit increases ever since December 2021. Then we saw single-digit increases back in January 2022 compared to January 2021. Then last May, we reached an all-time record high when the median sold price here in California was just over $900,000. That was a 10% gain compared to 12 months ago. Look at this though, the fallout here, going to negative price growth for the past 3 months in a row. On top of that, home prices have decreased in 7 out of the last 8 months here in California. The only increase was right here back in August, a slight increase from 833,000 to 839,000. So home prices have decreased in 7 out of the last 8 months. But of course, there's more. Take a look at this. Excluding the onset of COVID, which was May of 2020, January's numbers here, a decrease of 1.9%. This is only the third year-over-year decline since February of 2012. And take a look at this because we're now seeing negative growth for the past 3 months in a row. The last time we saw a negative growth regarding home prices in California was way back right here, February 2012, where we saw a decrease by 0.9%. And again, the only 3 times we saw a decrease compared to 12 months ago were the last 3 months right here, November, December, as well as January this year. So in other words, this is only the third year-over-year decline since February 2012, or nearly 11 years. But wait, there's more. Take a look at this. When comparing home prices this January compared to the highs we saw back in May 2022, all-time record highs of $900,000, that means that home sold prices in California have decreased by 17%. That's a decrease in home prices going from $900,000 to $751,000, a decrease of 17%. This is actually a much worse than the national decline of a decrease of a range of 10% to 11% on a national level. Whereas in California, we're seeing a decrease by 17%. Also, I want to look at how this compares to years past because, of course, it's normal to see home prices decrease or plateau out in the second half of the year, right? But not a decrease by 17%. So I actually want to talk about what happened back in 2019 as well as 2018. So the change in home sold prices during that same time frame, which is May through January, so May 2019 through January 2020, home sold prices decreased by 5.9%. As you can see right here, they went from 610,000 to 575,000 in January 2020. Whereas this year, we're seeing a decrease by 17%, much worse than we saw back in 2019. Enter 2018. May 2018 through January 2019, we saw a 10.7% decrease in the median sold price here in California, going from 600,000 to 536,000 in January 2019. Therefore, this decrease of 17% we're seeing over the past 8 months is much worse than the decrease we saw back in 2019 as well as 2018. Also, if you guys are just curious here, home prices have increased by 7% over the past 2 years here in California. Going from, what was this, back in January, 699,000 now to 751,000. That's an increase of 7% over the past 2 years. And also we saw gains in 2022, an increase by 1% when comparing January of 2022 through December 2022, a gain of 1%. In any case, hope you guys appreciate that additional analysis that I'm guessing you're probably not gonna see anywhere else because this is based on my own analysis here. Anyways, let's go back. So let's talk about condos and townhomes very briefly. Condos and townhomes continue to decrease. The median sold price this January was $580,000. 1 year ago, it was $600,000. And also, just like for single-family houses, we saw a peak regarding condos and townhome prices back in the spring months last year. Price per square foot for single-family houses also continues to decrease as well at $371 per square foot. That's a decrease of 1.6% from last month and a small increase compared to 1 year ago. Also, the sale price to list price ratio, I believe this is the final list price ratio, or the final asking price the home seller asked for the house. So that actually would exclude price reductions here, which I have some stats to share with you guys here in a little bit. Anyways, the sale price to list price ratio was 96.5%, meaning home sellers sold their houses for approximately 3.5% less than their asking price. And this, of course, is much different compared to 2021 through the second half of 2022, where on average, houses were selling for over the seller's asking price. We're also seeing a lack of houses selling over the seller's asking price this January because only 20% of all houses that sold in January here in California sold above the seller's asking price. 1 year ago, that ratio was 57.4%. Now it's only 20.5%. This, of course, means that approximately 80% of all houses that sold in January sold at or below the seller's asking price, which is virtually reversed when looking at the highs we saw in the spring months last year, where the percentage reached a high of 72.8%. The vast majority of houses selling for over asking, now they're selling for the vast majority below asking. Obviously, one of the main reasons why we're seeing this fall out in our housing market here in California and frankly across the United States is this right here. Average rates, I believe this is according to Freddie Mac, for January was 6.27%. 1 year ago, it was 3.45%. So rates more or less doubled compared to 12 months ago. Now, you can see that right here. Actually, this is Freddie Mac. Yeah, 6.27% this January. 1 year ago, it was 3.45%. I also want to give you guys an update regarding housing inventory in California. So the month supply right now is at 3.6 months. Back in January of 2022, it was only 1.8 months. So the month supply has been more or less increasing ever since really the early parts of 2022, much higher compared to 1 year ago, but historically speaking, actually very close to what we normally would see. So back in 2014 through 2019-ish, it's more normal to see the month supply in the range of 3 to around 4 months. And obviously at 3.6 months, this is much lower than the highs we saw back in 2007 when the month supply was very close to 16 months. In regards to the number of houses for sale, and actually I had to take off my jacket because I'm hot. Anyways, active listings, look at this, because we did see a slight decrease last month or in January. When looking at the number of houses for sale here in California compared to years past, look at this, because right now for January, this is much higher than last year, and of course much higher than 2021 as well. But when looking at levels back in January 2020 though, back then there was approximately just under 40,000 houses for sale. Now there's approximately 20,000 houses for sale. Also back in 2019, there was approximately 50,000, and in 2018, also approximately 40,000. So even though we have far more houses for sale compared to the past couple of years, historically speaking, we're still at very low levels. And here's another way to look at this. This is year-over-year changes of active listings because in January, we saw a 64.8% increase from January last year, 65% increase, which have been seeing double-digit increases for quite some time here. And going back to 2015, unlike anything we've been seeing here. We did see a slight increase back in 2018, again of up to approximately 40%. But this year, or actually the past several months, nothing like we've been seeing here, at least going back to 2015. What's really interesting though is that we're looking at this gain of 65% here. It's really remarkable because we've been seeing fewer new listings compared to previous years. And actually maybe one reason why we're seeing this levels right now well below pre-COVID levels. Look at this. So here's new listings. In January, there was just over 12,000 new listings. 1 year ago, January 2022, there was actually 14,382. Back in 2021, over 16,000. Look at this. In January 2020, nearly 20,000 new listings. In 2019, over 22,000 new listings compared to 12,000 this January. So compared to 12 months ago, that's a decrease of 16.3% in the number of new listings in California. So one thing I do want to mention regarding this is that if we had an environment where new listings were absolutely skyrocketing, let's just say all these numbers right here were virtually going straight up, that would cause housing inventory to absolutely skyrocket as well. And our housing market here in California would look a lot worse. But despite the fact we've been seeing fewer new listings for 7 consecutive months, our housing market has been softening big time, as you can see in the stats today. Let's also talk about how fast or how slow houses are selling here in California, because days in the market was 33 days. 1 year ago, it was 12 days to sell a house. This means it's taking approximately 21 days longer to sell a house, or approximately 3 weeks longer. Obviously, this is one reason why housing inventory has been increasing though, because we're seeing a lack of contracts being signed, and also it's taking longer for houses to sell, and that's increasing our housing supply. And of course, this increase of housing supply is not due to an increase of new listings like I shared. In regards to price reductions, have a look at this, because the share of listings with a reduced price this January was 35.8%. One thing that caught my attention is that the share of price reductions has been decreasing for 3 consecutive months. The share of price drops right now about 36%. Approximately 4 months ago, the share of price drops was approximately 45%. Now, having said that, the levels we have right now is much higher compared to the past couple of years, of course, but is more or less on par with levels back in 2019 as well as 2018. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I really appreciate that. Of course, I appreciate you, especially if you guys are still watching this video for this long video. Anyways, hope you guys have an awesome day. I look forward to seeing you on the next video.